Well, this has certainly got to be one of the craziest markets that I've ever seen. Most of the guesses that the experts are making out there, very few of them are coming to fruition. Obviously, we have had a downturn in the market over the past 2 to 3 weeks, ever since this tiff has started. And when you think about some of the most popular calls, at least that I've seen on TV and Twitter and all those things, is that you have a major market crash. So that could still be coming. But interestingly enough, today, here about lunchtime on April 9th, the NASDAQ as a whole is up, 0.75%. And if we look at the Mag 7, heck, you've got Apple up almost 4%, Tesla about 3%. Now, as you've seen, if you've been watching the market, then all this stuff could be dramatically different by 4 p.m. But what I do love about this time is the wide range of opinions that come out, right? And nobody knows who's right, nobody knows who's wrong, but you start to see some very interesting bets being placed. And so for today, I thought I'd highlight here on Seeking Alpha some what I would consider major eyebrow raisers of stock picks that folks are making on the Seeking Alpha platform in the face of all these tariffs and uncertainty. So look through these, I'm going to call them contrarian tariff picks. But you can look at them and make your own judgment. All right, so let's jump into these, starting off with Apple. And obviously, if you're Apple, not only is the Chinese market an important one, but you also make a ton of stuff overseas, right? So if you ask me, at least on a surface level, Apple is in very unstable ground, at least until some of this news changes regarding tariffs. However, here on Seeking Alpha, we have Apple as a contrarian buy opportunity, Johnny Zhang. And let's jump into it. You got the summary right here. Apple stock dropped 19% in the last 3 trading days, the worst performer in the Mag 7, suggesting it has priced in negative impacts from tariffs. The company is unlikely to move all manufacturing back to the U.S., expecting higher product prices if tariffs persist, but this won't significantly impact its long-term growth outlook. After the sell-off, the stock's valuation has become more attractive, with non-GAAP forward PE 10% below the 5-year average in deep oversold territory. As the largest company in the major indexes, Apple's demand can be supported by the market in the short term. My base case is that Trump will partially roll back tariffs following constructive negotiations, or if the market continues to sell off as recession risks materialize, creating a strong upside surprise for the stock. All right, so the bull case for Apple there is, tariff rollback some way, somehow. I did read a little bit about the Apple tariff exemptions that they did have in 2018. Most of the experts, I guess, most of the Twitter experts say the way that these tariffs have been rolled out, there's not a lot of room for exceptions. I'm not going to pretend to know if that's true or not. However, with this contrarian Apple pick, you're obviously playing, or you're hoping, I should say, that you would get a rollback of some way, which really isn't that much different than an overall QQQ bet that I talk about a lot on this channel. I mean, if you're just going to go for valuation on Apple and say the valuation has come down, I think that QQQ offers a safer play. There's plenty of Apple in there, but just to be fair, we don't know how things are going to shake out. If I was going to take a chance on a standalone stock like Apple here in the risk of the China tariffs, I'd probably pick NVIDIA just because their growth rate is so much higher than Apple. So I think when you look at Apple, you're looking at single-digit growth rates on the top and bottom line. They obviously do the stock buybacks, but I would want to hit a bigger home run than Apple if I was only choosing one stock. However, the QQQ might be interesting here for some people because you get a ton of Apple in it, and then, of course, you get a ton of NVIDIA in it as well. All right, another contrarian pick here. How about buying right into the China danger? Alibaba is stronger than the Trump tariffs. Rating upgrade. This is from A.J. Burton. It was written on April 3rd. It looks like price at the publication was 117, and it's been down about 18% since. Looking at today, Alibaba's dropped 1.37. Here is the summary of the thesis. Alibaba stock took a minor beating today. Again, this would have been back on April 3rd, falling 0.34%. It fared better than most stocks despite the slight price dip. Trump hit China with the tariffs, among the highest of all nations. Is China? The total tariff is now 54%. I believe that's went up since this article. Alibaba does not send an especially high percentage of its goods to the U.S. Prices on many bulk items remain attractive even after a 54% tariff. I'm not expecting Alibaba to take a big hit because of these tariffs, and accordingly, I'm upgrading my Baba stock rating to a strong buy. All right, so that's one view. And that would be, in case of contrarian picks, this would be the view of buying right into the storm. And I would say one intriguing possibility about a trade like this is if we got into a world, the four-walled world of each country where nobody's working with anybody. Does that benefit Alibaba that already sells a ton of stuff in China as well as other countries overshore? And with that, do they make alliances with other countries in the wake of all these tariffs? I have no idea. It seems like a pretty big risk to buy right into the storm. What happens to China if these tariffs, come to fruition and last, let's just say, a year or longer? It's the same question we have here in the United States. Will you become a stronger country from an economics perspective, or will you become a weaker one? Tough for me to predict, but I would say that China exports a ton of stuff. It's hard to imagine them getting stronger as an economic country in the wake of all this noise we have right now. All right, next up, we got a double header of what I'll call contrarian picks from Citi Research: Dollar General and Dollar Tree. But here's where Citi is making their picks. The new tariff landscape now gives Dollar Tree cover to raise the price of most merchandise above $1.25, an easier move than when the company had to break the buck in 2022. A dynamic like that makes the discount retailer a dark horse winner in the new tariff world. As a result, Citi upgraded Dollar Tree to buy from neutral, lifting the stock into the green amidst a sea of red. While Dollar Tree was previously trying to manage China tariffs within its current pricing architecture, this higher tariff regime gives them further cover to expand price points from $1.25 to $1.50 to $1.75. And then on the same front for Dollar General was also given an upgrade at Citi, given that only 10% of the company's sales are affected by tariffs. I don't even know how that could be possible with Dollar General, that only 10% of the company's sales are affected by tariffs. I find that hard to believe, but, these people are writing the facts down, not me. If we look at the prices today for these stocks, you've got Dollar General, $87. It's down a fraction, as well as Dollar Tree. So again, you've got a different opinion here, whereas a guy like me sees a bunch of China products that will cost more. This analyst sees an opportunity for Dollar Tree, and I guess Dollar General as well, to raise their prices and actually add margin, which is something, at least for Dollar Tree, that worked particularly well the last time they had to do this in 2022. All right, next up we have Intel, a surprising tariff winner. Okay, this is again from a Seeking Alpha author. So obviously Intel's had terrible luck over the past few years, and a lot of that is because of competition. But now we're looking at a different environment where perhaps NVIDIA, AMD, Taiwan Semiconductor, they could be facing tariffs on their products, which would raise the prices. Maybe there's room for Intel to make some gains in that environment. Here's a summary from the author on their bull thesis. Intel targets over 100 million AI PC shipments by calendar year 2025, leveraging Core Ultra chips and 400 plus AI optimized features from 200 plus independent software vendors. Panther Lake, which is launching in the second half of the year on Intel 18A, is set to be the first high-volume AI CPU on Intel's next-gen node, anchoring future growth. Foundry posted a $13 billion loss in 24 despite $18 billion in revenue. EUV wafer mix remains low at 5%. Break even is expected by 2027. Then we have new CEO Lip Bhutan brings a huge return to legacy from Cadence, now refocusing Intel on agile operations and foundry trust building. With China comprising 25% of revenue, retaliatory tariffs and higher equipment costs may hinder Intel's AI data center momentum in calendar year 2025. Okay, so you got 4 points there. I don't know if those are all 4 bullish points. It's kind of hard to read between all these things. But you're banking on the first statement here, banks on the delivery of 100 million AI PC shipments. And then you have this Panther Lake in the second half of the year that is supposed to anchor future growth. And then finally, the foundry division maybe reaches break even by calendar year 2027. I haven't went deep on Intel in many years, but I can tell you that these probably wouldn't be the things I would pick in a contrarian thesis, but I'll leave it to the author who likely knows much more about their technology than I do. I still think you're playing with fire. Going into a company that has struggled to make gains even in the best of times. And you're asking a lot for that shift to come back, right? We know the technology moves fast, but on the same token, the way when you're in semiconductors, ultimately your piece goes into another product. So to say that tariffs, let's just say on AMD, tariffs on AMD have people move into Intel. I mean, maybe if they're in an absolute jam, but this is going to be something that would take probably years of tariffs in order for it to come to fruition. That's not to say that Intel can't go up from here if they just, make some progress, which they failed to do for so many years. However, I would not, I'd be cautious to say that the tariffs themselves will bump a company like Intel. All right, guys, so there you go. 4 contrarian tariff stock picks from 4 different people. I tried to pick ones that at least when I read the headline, I was like, wow, no way is somebody picking this. But each one has their value, and credit to anybody in this environment. No one has been correct on anything as of yet, and this game is still playing out. So these contrarian stock picks, even though I don't necessarily agree with all of them, you just don't know how they're going to turn out. Before you go, don't forget to check out that special offer for Seeking Alpha Premium down below. Let me know if you have any crazy contrarian stock picks in this particular environment. Leave your picks down below in the comments. I hope everybody's doing well. We'll see you on the next video.